Hey y'all, my name is Rennie Thomas and I'm going to be teaching you guys how to track and identify emerging real estate markets. Gone are the days when you're confined to investing solely in your backyard that may or may not be profitable. Because of the technology that you and I have today in our back pockets, we not only can buy, but we can manage properties from thousands of miles away. I've done it and I'm going to show you guys how to do it too. So first we have to understand the basics of real estate. We know that real estate follows predictable cycles. Because they're predictable, we can use those to track and identify which markets are about to boom, which markets are about to bust, and which markets are going to flatline. If there's one thing that you guys remember today about tracking these market cycles, it's tracking job growth. Because job growth, more jobs equals more people. More people equals more demand. More demand for housing brings more appreciation, and more appreciation brings more money for you if you are a homeowner. So let's teach you guys how to remember that market cycle. The market cycle, it follows a story, okay? It starts in the buyer's market phase one. This is when the market is at its absolute lowest. Nothing grows there. There's been no new job postings forever. Wages definitely are not rising, and shoot, McDonald's probably hasn't thought about putting a new location there in the last decade. People don't feel economically safe here, and this place sucks. But for whatever reason, the local economy, it starts to change a little bit. Something starts to shift, and we move into the buyer's market phase two. Now, for some reason, jobs are being created. Wages are starting to rise. People think, hey, I think I want to live here for a little bit longer. Let's think about buying a home. This is when the market shows signs of recovery. Once the market shows signs of recovery, we move into the seller's market phase one. This is when it shows rapid appreciation. Now, because people are showing interest in this area, so are big jobs. And jobs say, hey, let's move our HQ here. This is a growing city. And then with that is a whole lot more job postings, and then in comes the service-based economy, the people to service the people who have now come into the big HQ corporate jobs. And then if you own property at this section, huge appreciation. Then we move into the seller's market phase two. This is when the market has reached its absolute peak, and people here are thinking, wow, this is going to be great forever. I don't see how this could possibly change. But because you and I are smart real estate investors, we know that it follows a cycle, okay? We're gonna fall right back into the buyer's market phase one because for one reason or another, that market cannot sustain any more economic growth, and it might not completely drop, but it will flatline. It cannot support any more economic growth. So once you've remembered the market cycle, you have to remember the checklist of emerging markets. The number one question you have to ask yourself: is population expected to grow? If population is expected to grow, I think you found a winner. Then you have to look at job growth. Not only are there going to be more jobs in this area, but what kind of jobs? Not all jobs are created equal. If there's just one industry in that area, and then that industry goes away, now you have a booming market. Happened in the Midwest when all of the car manufacturers moved overseas. Look for a diverse job market. Then, once you've found an area that is going to have increased population and increased job growth, you want to look at appreciation, okay? So you're going to look at the last 10 years, and then you're going to look at the last 12 months. If it's 10 years, it's kind of straight, maybe a little bit up, and then you have a 12-month spike, you found yourself a winner right there. You found yourself on the cusp of a buyer's market phase two coming into a seller's market phase one. Then you want to know, are there barriers to new development? Because if you've found a brand new emerging market, chances are a real estate investment trust has too. And what they're going to do is they're going to come in and they're going to build 500, 1,000 new homes. And now homeowners are no longer competing for the house that you own. They're competing for the new ones. And we don't want that. It completely crushes demand. Now there's two types of barriers to new development. Barriers to new development, they can either be geographical, which is Manhattan, or political, which would be Boulder. So a geographical barrier, such as Manhattan, We all know the island, it's completely built out, it's beautiful. Every inch of buildable land has already been built, which means that if you want to build something else, you have to tear something down. Not only is it really expensive, but it takes a lot of time, which means that supply will never catch up to demand in those cities. A political barrier to entry is something like Boulder, Colorado, where the local government came down and they said, no new building for a whole year. They put a building moratorium on the entire city. What this did was it made everybody who lived there fight over stuff that already existed because nothing new could be built. This increased appreciation in that area rapidly for that whole year. Then remember how I told you guys that I followed these principles? About 4 years ago, I landed on Dayton, Ohio. I bought a duplex out there, and in 4 years, that thing has appreciated over 70%. If I would have stayed the easy route and invested in my backyard of Fresno, 45% over the last 4 years. So I was able to gain an extra 30% by doing some research and finding an emerging market. Now it sounds all great and easy, but unfortunately, I do not have enough time up here with you guys to get into the nitty gritty. So if you guys want to scan that QR code, that will take you to my LinkedIn page where I can send you guys all of my notes, my case studies, and help you guys build teams in new markets outside of Fresno. And honestly, you guys would be doing me a favor. I love talking about this. So if you guys are interested in this at all, I would love to be able to help you guys out and get you guys set up for a better future. Yeah, thank you guys.